Hello traders, welcome to the LFB and our daily global video charting review. My name's Marco Haig. We're looking at a review of the market on April the 1st, 2011. Hope I find you well. We do have to point out that any form of investment does involve substantial risk and is not suitable for everybody. There will be ebbs and flows. And we do post up a disclaimer to the website that we ask that you read and accept before taking and using information on the video. Looking at the dollar index here, we've got a dollar index chart with momentum candles on it. When the candles are blue, momentum is long. When candles are white, momentum is short. We've also got a trend line which tells us on a 1 hour or 4 hour chart in what overall direction the market's moving this particular asset. We've then got a volume study with a moving average through it, so we can see when the volume hits in this particular asset class. And then we've got an average trading range, which tells us if the volume increases, are we getting increasing and sustainable price action. Choppy, volatile, and very reactive to global market moves is the easiest way that we can explain the forex market at this time. The ability to move hard in such tight ranges that we can see on these charts reveals that one of two things are happening in forex right now. It's either a major consolidation or slow and quiet distribution of existing positions. The breaks away from the current price point areas on increasing volume and major headlines will be key to being in the next trending phase of trade rather than sitting and watching it unfold. Tenured traders will be looking for a volume spike way over and above the norm on a daily close across most major traded markets. Whether that will be long and short, this dollar index seems to hinge on whether it'll be on a day that the S&P breaks 1345 going long, which will be a short dollar breakout, or whether the S&P drops under 1295 going short, which will be a long dollar breakout. Whatever the number, increasing volume for the blowout top or bottom will be pivotal to how things can then unfold, and the LFB trade team will be right here to signal it to you if you're registered with us. The art of foreign exchange trading until that blowout volume day happens will be in having signals in place that sell resistance and buy support in line with the top and the bottom of these 4 hour and 1 hour trend and price action channels, especially on the days of red flag economic releases. We're posting the video ahead of the non-farm payroll numbers from the US, and there's been heavy anticipation of this number that's dominated the calendar this week. And it's probably going to be this report, this NFP report, that provides the catalyst that tests speculative interest levels that will in turn attempt to draw in institutional volume. Although not as reliable an indicator on individual markets as it was before the high-frequency trading started to dominate proceedings, increasing volume across most futures markets on any given day may be the clue that a strong and sustainable trend is starting in global currency trade. If we look at the volume levels on the dollar index, when we get a spike over and above the moving average, it's coming at the same time every day. Coming at 10 o'clock every single day is when you get that volume spike. And then what you tend to do or see is average trading range then just drops off heavily. So all of the momentum and the realignment seems to be taking place as the Wall Street session gets underway, but we're not then creating sustainable price action. Traders and investors are getting the same market mechanic signals that previously drew in big moves, with trading patterns that mirror those moves in 2008. Signals and alerts will follow on global indices, oil, gold, silver, and the major forex pairs as this situation unfolds. Just talking about consolidation. Consolidation involves maintaining the existing trend by fiercely protecting near-term price points, and consolidation, the holding of an existing position, can extend itself for so long that it actually turns into distribution where the asset starts to get sold as the realization that the original trend has expired. If we add in low volume levels as we've got right now and volatility, we get price action that looks slow and choppy. Consolidation phases usually happen on light volume, overall very low volume levels. Distribution, when we get periods of distribution, they involve liquidating the existing positions that have completed their target, but also doing that whilst disguising that that liquidation is taking place in anticipation of a move in the opposite direction. Distribution phases usually have heavy, erratic volume spikes, which we can see here on the dollar index at this point in time, as the existing position is sold and then bought back in small quantities. Because buying back in small quantities, then reselling, helps that distribution phase from turning into a sell-off before the major players have finished liquidating their inventories. The volume seen in the spot forex market reflects very well the actual countable volume that we can see on the futures market in the dollar index. And we're now looking at most currencies starting to build some forward momentum, and the 6-month consolidation phase while the Federal Reserve's quantitative easing program was implemented could now very easily turn into a distribution reversal or a swing point. So we've got the price points on the S&P that will probably trigger the next sustainable moves. Long above 1345 on the S&P or short at 1295. A sideways pattern of trade that's caused by that distribution change looks to be happening on the major currency pairs at this moment, and that's a little bit ahead of what may be seen in the global markets. Most currencies are looking to build forward momentum, and the 6-month consolidation phase now could create that heavy swing point. For experienced market participants, the distribution phase is known to create the most market fear or volatility, and that's what experienced traders with a plan can feed off. There's no real way to confirm the move from consolidation to distribution until it's right upon us. And at that time, a herd mentality tends to over exaggerate the subsequent moves, and the buy sell button has a tendency to get jammed down in the overall market, which creates that initial trend formation. It would seem that the way global patterns of trade have developed, that distribution has taken place. We've seen sporadic volume and some untimely moves, as well as exaggerated reactions to news headlines that just couldn't follow through with sustainable price action breaks. There's nothing strong about market participation or volume levels recently either, and that's the perfect foil to get a major job done. Without increasing speculative interest on the way up, that means that the drop will always be the elevator ride that followed the stair steps, and we could be in one of those major swing point positions which we're looking to confirm next week. The non-farm payroll release from the US may be the instigator of a major swing point across all global traded markets, and we will be here to signal it to you as these charts start to unfold.